The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the offices of Duke & Duke, 100 South Broad Street, Philadelphia, Pennsylvania, 19147. Let's take a look at the German DAX. It's holding up okay, as you can see here. And if we take a quick look at the FTSE, you'll be able to see that we did make some type of a double bottom today. Haven't rallied much, just about 900 points, which is quite a bit in the FTSE. So there's a possibility that this could be happening. Now, someone asked me the question just a few minutes ago, is this the end of the world for the stocks? Folks, if you take a look at that newsletter that I send out every week on Sunday, I mean, we're right at these levels that we were expecting. Look at, the leader of this thing down has been the banking index. And this is what we were looking at as of Sunday night. And here we are coming in on Wednesday, the 19th, and we're right there at point D. That's where we are. If you look at the Dow Jones Industrial Average, bada bing, bada boom, we're right there also. I know, and everybody's bearish, so no one's more bearish long-term than me. Well, there's probably somebody out there. But, we should have a pretty good rally starting in here. We had a pretty good rally yesterday. We rallied 50 handles off the bottom and then went down and made new lows in the S&P. The key to me, looking at these charts, and I look at them every day, is that with the other indices, we did not make a new low in the Dow Jones, nor did we make a new low in the NASDAQ. However, we did make a new low in the IWM, just marginally, of course. But the key to me is this banking index held pretty much at that D point. Now, I don't know what's going to happen this morning, but the key there is nobody else does either. But let's remember that we've come down since October, mid-September on some of the indices, October 1st on some of the others. So we're down here 10 weeks. And this is usually all you're going to get, 8 to 10 weeks. This happens to be the worst December in the stock market, folks, since 1931. And that is that's a long way down. So you do have a very, very oversold market, a lot of pattern completions. If you remember, if you do look at the newsletter and pay attention to some of those patterns, one of the key ones we look at, of course, is the transportation index, because this is the movement of goods. And I noticed that Federal Express is down 7% pre-market. We've already made that 300 points. We were looking for that sometime this week, and we got there yesterday. So we've completed the big ABCD in the Dow Jones Transportation, and we did it. We've completed ABCD in the Dow Jones. We've completed ABCD in the NASDAQ. We have not completed the ABCD in the S&P because that's all the way down to 2460. So even though it made a new low last night by just a little bit, it's held relatively well so far. Now, one of the other questions that someone was asking me early this morning was, as we look at some of these things on a shorter term basis, what are we seeing? Well, we're seeing really good volatility. If you remember, folks, we've been watching this S&P for several days now. In fact, it's 4 days in a row. And if we just post what we were looking at here, you'll notice that the market here has done exactly what it's supposed to do. Let's just get it up here so you can take a look at it. And if you'll notice here, and this was where we were on December the 16th, you'll notice that we were looking for a price objective around 2560. We got down to 2530. We had a 50 handle rally from 2570. We rallied all the way up to 2612, I believe, and then back down again. And so this is what's really going on. Okay, now the question that we have is, do you think that all-time highs have been reached for the next, say, less 24 months? You could add another 0 to that, young lady. You could say 240 months. That high will not be seen again in my lifetime, in my opinion. I remember those of you that follow the newsletter, I said this is an extraordinary time, and the probability of this winning was something better than 110%. And the reasons for which I gave some of them, but I couldn't give two of the most important ones. I said I would give those reasons after the move was over, and I will do that eventually, but mainly it was based on the targets that we were looking at. I mean, they were everywhere, folks. There were signs there that not only were they flashing, they were they were intermittently flashing. In other words, like a laser. So, you know, we had just everything was happening. And not only that, but you had these FANG stocks that were looking ridiculous. And then, you know, you had something like Facebook that drops, what, 30% in one day, from 174 to 138 or something. I mean, so all of that was telling you that there's something rotten in Denmark. And I love Denmark. That's one of our favorite places to go in Copenhagen. What a beautiful place and wonderful people. We really love it over there. Anyway, we get there every 2 years we go for at least a couple of weeks. Anyway, if we look at some of these patterns, and they're all in the newsletter, I don't want to keep repeating them in here because they get old and, you know, people get tired of it. So I try to mix it up a little bit with some short-term patterns, but that's pretty much what we're looking at. I don't see that monthly expansion at 3045, young lady. If you get that one, Walter and I will be heading out into the desert. Of course, all of you know that Walter is my trusted burro that I ride here in the desert when gas prices get really high. And right now they're pretty low. Speaking of gas prices, folks, if you'll remember, we were talking just a little bit about the crude oil earlier in the week because this is one of the features from the newsletter. No, the desert is not harsh. The desert is nice. It's about 72 today in Tucson, I understand, and we'll be home there in a few weeks. Anyway, look at crude oil, folks. This is where we were. The 1.618 expansion was at 49.5, and that's usually very, very bullish. But look, all we could do was make a $5 rally, a 10% rally that took us up to just about 54.50 a barrel. Then we went sideways for well over 2 weeks. That is not acting bullish. And what happened is we went through there like melted butter, and we went down and we made the long-term 78% level at 45.60. The low has been 45.70. So there's a pretty good chance that we might have another pretty good rally in crude oil. And since everybody is bearish now, we might get a really good rally. We could get as much as, you know, $8 or $10 a barrel possibly. But this is a very bearish market, folks. So don't expect a whole lot. It's better to sell the rallies than to, you know, try to buy the dips. That's the way I would be looking at it. But at some point, you know, like today, the buy down there was so clear that you have to take it because the risk is so small at that level. You're only risking, you know, roughly 50 pips. And if you did that, you know, you put your stop at break even now and just ride it into the surf because it's got a chance here. And we got the oil numbers today, so you got a free, you know, free chance at it. Okay, we'll talk about bonds when we get back. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, one of the questions is, what is the Fed going to do and how will it affect the markets? 2 questions over my pay grade, but I do watch the patterns. And here we have notes and bonds rallying, which means interest rates are going lower. And what is the Fed going to do? They're going to supposedly raise rates by 0.25%. They are behind the picture in the mirror, as always, folks. The Fed they're reactive. They're not active. So remember, I mean, everybody pays attention to them, and there's a lot of volatility around Fed time. But frankly, you know, just go back and look at the history of it, folks. Treasury bonds and Treasury notes, they topped it a year and a half ago. Remember, we're up at 170. We're at 140 now, you know, in these. Now, you'll notice that the Treasury bonds have rallied above the 78% level. And the Treasury notes have also done that, so they're going just the opposite of what the Fed is supposed to do. They're supposed to raise rates, i.e. bonds and notes going down, and what bonds or notes doing? They're going up. I believe this is nothing more than a short covering rally because long term, you know, you're going to have to really, really get rates a whole lot lower to turn this market around. This is not a very good long-term picture that we've looked at, you know, over and over again. So that's a really key thing to, you know, to keep in mind. But we've got some really positive things going on here. I just wanted to bring to your attention, of course, that Dow Jones Industrial chart one more time that we posted here on Tuesday. And there you'll see it here that we are still in a rally mode. We went down to that 23,600. The low was 23,490, I believe, during that big sell-off on Tuesday. But we've held that number, you know, relatively well. So whether it's going to continue or not, we'll have to just to wait and see if that's going to happen. Now, the crude oil has already rallied $1.30 a barrel so far, if that in fact is the big 786 that we were looking for. So if you're in that one, make sure you put your stop at break even, because you got a nice little run in that. You don't want to see that one turn to a loss. Now, one of the questions that we had is about cycles and how I got started doing that. I'm going to take a little trip down memory lane here, and I just used the chart of Disney here, and this goes back to 1970, folks. It was the book, The Profit Magic of Stock Transaction by James Hurst. I went up to San Francisco. That's where I met John Hill from Futures Truth, who ended up being my mentor, and of course my very dear friend over the past 48 years. And basically what Hurst talked about was there were nominal cycles in stocks, and not stock indices and not commodities, but in stocks. And you notice this is the chart of Disney, and you'll notice if you just drew those cycles in every 21 days, all during April, May, June, and July, it made a 21-day low at those times. And then you'll notice in August, in early August, that switched. It inverted. It was making a high instead of a low. So that's one of the problems. Usually these cycles that Hurst talked about only go through 2 repetitions, or possibly 3, but they don't go, farther than that. You really don't. Now, when we were in San Francisco, and believe me, there were so many people that are very famous nowadays. There was, oh my gosh, we had Peter Elides there, Larry Williams, Walt Bressert, who became one of my very dear friends, and one of the reasons I moved to Tucson, Arizona, because I used to come over and visit he and Teresa in the 70s and 80s when I was working at Drexel, and also when I was at the Merck, and then also when I moved to Pismo Beach, they would come up and visit me, and so I got to know them very, very closely. But the people that put on this seminar in San Francisco were the people from Cyclotech, and what they did was they provided a service where they would send out the charts every Saturday morning by special delivery, and you would get the commodity charts. These were all commodity charts at this time. And you'll notice that these cycles that they were looking at, you'll see the long-term cycle there. That's a 142-day cycle. When you double that, that takes you to 285 days. And then this is Disney, and you can still see those 20-day cycles that were in there. What they were doing is they were looking for multiple confirmations to come in around that October 22nd level. Well, in this case, you don't have it, because these cycles, they're dynamic. They're not static. In other words, they work for 2 or 3 repetitions, and then they're expanding and contracting. And that's part of the reasons why I got into the astro part of it later, because I would go to the Foundation for the Study of Cycles and visit with Gertrude Shirk, and I was fortunate enough to, be very, very close to her. She shared me a lot of information. And so I, got started, but I really didn't get into the astrology until, the mid 70s. And so I had a real rough idea of what was going on with cycles, but not nearly as much as I thought that I knew. The fellow that at the time that I was doing this was 48 years ago, was Peter Elides. He lives up in San Rosa, California, with Peter Elides Stock Market Cycles, and he does great work. And by the way, tomorrow, speaking of cycles, we're going to have Stan Harley on. And Stan also is in that group. He's one of the best there is. He's been in Timer Digest quite a bit as one of the leaders, and his ideas of cycles have been extremely important here at TFNN, giving us some good ideas. And he'll be chatting with us tomorrow also. So we want to keep a close eye on that. But anyway, when we were looking at these cycles like that, I mean, I became a technician because of John Hill, and then I began to realize that these cycles that were on the bottom that we look at all the time are also coming in on the top. And if you take a look here at this Japanese yen, as it was just the other day, we were having a 135 pattern. Now, if you flip that over and turn it upside down, what do you think you have? You have a 135 on the bottom. So it's just repetition over and over again. But all I'm doing is just adding the ratios of the Fibonacci summation sequence to try to find a place where we can put a trade on and not risk very much. So that's the key of what I'm looking at. Whether that's going to be, it helps, it works for me, it works for other people. Sometimes it doesn't work for everyone, but that's not unusual, because the quickest way to being totally frustrated in your life is try to please everybody. And if you try to do that, you're beating a downhill run here, because that's impossible to do. You got to take care of yourself first, and all the other things will line up. Okay, now I did want to bring out one more thing regarding that with the cycles, is the fact that the long-term cycles in the stock market have reached levels that we will not see again for a long time. I mentioned it a little bit earlier, but I have to reiterate it again, because as I get ready to do the New Year forecast for the year and look at the long-term stuff, it certainly does look like it's getting ready to have at least a pretty good correction. Remember, we haven't had, this is nothing more than a normal correction that we've had here. And after we get through with this rally, if we get one here in December, about the middle of January, end of January, we're going to see another leg down, is my guess. So we'll take a break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened, and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I've been reminded gently that tomorrow our guest will be Norm Winsky. Norm, we call it by the minute Winsky, will be our guest on the 20th and on the 21st, the day of the winter solstice when the sun enters into Capricorn. We're going to have Stan Harley as our guest. I'll rearrange that this afternoon, but boy, we've got some big stuff happening at this winter solstice, folks. We've got Venus is going to be trine to Neptune, which is huge with crude oil. We got Venus conjunct Jupiter, that's big for everything, and then we got the sun moving into Capricorn, which is the longest day of the year. So that's going to be another one that looks pretty good. Yeah, it is going to be our guest tomorrow will be Norm Winsky, and our guest on Friday should be Stan Harley. I have to change that. And so I will get it changed. But we will have Norm on tomorrow. I promised it because of the fact that he likes to be on right around those times of the new moons and full moons. And we have one of those beautiful full moons coming in here on Saturday. And so we need to get him here on the 20th. And I think we'll be able to change with Stan easily just due to the holidays. It shouldn't be too much. We just hit $47 a barrel. So now in oil, we rallied up from that level relatively well. So if you're in that and you got the notice with you'll see that you put your stop at break even now, and not to worry about it. So that's what we're going to be keeping an eye on here, folks. When we started this, one of the things that I looked at, in looking at all these indexes, is the fact that Dow Jones Transportation Index went right down to that level that we wanted to see. Just like we had with the banking index, the transportation index has completed the big ABCD pattern. And if you'll remember from Gartley's book on page 221, one of the best trades you can do is to buy the ABCD correction in a bull market and sell the ABCD correction in a bear market. And this is, in fact, an ABCD correction in a bull market. So we should be really near a bottom here in the transportations. We did get those 300 points lower that we're looking at for beginning of the week. That was another reason why we felt that the transportations, or the S&P, was going to go below 2570, which it did. And didn't get down to the target that the others made. And the Dow Jones made the big target, of course, at 2360, 23,600. So that we should be over a bottom. And, here we are on the 19th. So we're in that zone that we want to pay particular attention to. I can remember the December 1974. This was one of the reasons I got really heavily involved in astrology, because in 1974, I covered this in the book, Astro Cycles, The Trader's Viewpoint, is in October of 74. That was the October crash when the Dow got down to about 500 from 1,020. Over the past 2 years, it dropped by 50%. It made a monster bottom. We had multiple conjunctions and oppositions in October of that year. And then again in December, we turn around, and there we are making some more oppositions and conjunctions, and it was the secondary bottom that really took the market higher, and then it started to rally. However, it took a good, we bottomed in December of 74, and we didn't take out those highs until 7 years later, 1982. 8 years later, until we took out those highs up above 1,070, I believe it was, in the Dow, and I think the S&P was at 130 or something like that is when it took it out. So that's really that's true. You're right, Maria. The market is oversold, but can still go lower. Like Jesse Livermore, if you remember the book Reminiscences of a Stock Operator. He said, don't be afraid of high prices. They're there for a reason. And don't be afraid of low prices. They're there for a reason. So high prices can go higher. Low prices can go lower. We've seen this in crude oil. Remember, they were telling us at $77 a barrel when we were at the 618 on the weekly charts. At $77 that we were headed to 100. 100 is coming up. 100, 195, 100. They kept giving us all this cannon fodder. And here we are at 46 earlier today. And, so you got to follow the charts, trade what you see, not what you believe. That's it. That's a very good quote. David White has just told us a quote from John Maynard Keynes, markets can remain irrational longer than you can remain solvent, and that's absolutely true. Yeah, the funniest one though was back in 2008 when Goldman Sachs was putting out their big special report. It was in the news everywhere. $200 a barrel in crude oil is in the bag, trading at 141. It topped at 142 and dropped to 30. Hello? Let's take a judge's ruling on that one. Public loses again. Anyway, pay attention to what the charts are doing, not what people are saying. And that includes me. Look at the charts. I'm a chartist. I don't know diddly squat about the fundamentals. I don't know how the Fed's going to react. And I have a master's degree in economics, and I still don't understand all those numbers. But I can understand the bar chart because that's really simple. If prices are going up, there's more buyers. If prices are going down, there's more sellers. So keep that in mind. It's a very important concept that we really need to look at. I've been asked to take a look at the international markets, and I think the easiest way to do that is through the chart of Dennis Gartman. And I'll bring this up here so you can take a look at it. And you'll see here that all of the markets have been in downtrend, some of them for quite some time, but there's others that are much stronger than others. But what we're looking for are really good turning points. We talked about the market topping in September, October. Folks, this is the first time I've seen an indication of a bottom down here. I mean, it's a pretty strong indication. Hey, like Twentyman says, defy human nature. Do the work yourself. You want to see how close we are to a bottom? Go look at the FANG stocks. I posted those in the newsletter every week just so that people can watch it. But look at the FANG stocks. They're not making new lows. They're making Gartley buy patterns down in here. Netflix, Facebook, Amazon, Apple, Google, they're all making some type of hey, maybe the bottom's not going to hold, but that's what it looks like now. So it doesn't look nearly as bearish as you might want to think. Like to say, is it the end of the world? He said, no, it's not, but you can see it from a high building. I don't really think that's happening, but we'll have to do one thing at a time as we look at that. Even our old friend Deutsche Bank, which is we talked about that early in the week when we made the comparison of what happened with Lehman Brothers, and I'm sure everything is different, but if you look at this chart, you'll see this amazing, no, you're not dreaming. Just take a look, Maria, just go look at the FANG stocks. They all look pretty good. I don't want to go through all this. You get tired of listening to it. Anyway, look at this Deutsche Bank correlation between Lehman Brothers. It looks like Deutsche Bank is heading to where Lehman Brothers went to, which was at 3 cents a share. Now, Deutsche Bank, if you remember, the long-time 1.618 expansion was at 856. We made a low of 823. We rallied up to 895, and now we're trading around 870, so we're still above that. And it's starting to hold a little bit, and we could hold here for 2 or 3 weeks before we start down again, or we could start down tomorrow. We'll have to wait and see. 877-927-6648.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. 9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, I wanted to get back to the cycles just for a bit here. Someone asked a question, and how do you use these cycles on a shorter term basis? There's really no difference here. If you'll take a look at this, I'll post the one from the euro because we did this earlier in the week, back actually on last Friday. You'll notice that we had that 78% retracement come in at the 112.70. We had taken out the low from November the 27th by 1 pip, and in a market that trades $1 trillion a day, 1 pip is like fly on the ointment. Anyway, we are now moving above the 78% level today. We hit that yesterday, backed off about $500, and then we just took it out just a few minutes ago at that 114.15. That means it looks like we're getting ready, to make another ABCD structure up here, possibly at the 115 level. And that's why, we were so emphatic about what was happening with the dollar index, because the dollar index yesterday, or over the weekend, was really telling us that we were setting in an area that was going to be extremely important, and that is in fact been the case. If you want to double check yourself, go to the newsletter and you'll pull that up. You'll see that that area of right at 97 to 98 was a monster area. We'll put it up here so you folks can take a look at it. We're trading at 96.50 this morning, and the futures are trading at 96.8, but the cash is trading around 96.50, and so we're starting to move down in that third drive up there that we're looking at possibly 97.72. And it looks like we've made a triple top up there at 97.60. In fact, with the action today we're seeing in the euro, anything above that 115 in the euro means that it's probably going to hold, and that means that maybe all this stuff with Brexit is going to be okay. And since we're talking about Brexit, we want to take a good kudos here to our good friend Mr. Z here at TFNN, and he was looking for a buy down there in the British pound there at that 125 level. The low was 124.75. We're trading two handles higher, 126.70, and we're heading towards looks like 127.75 to start off with. But this could be a major bottom here in the UK's British pound, because it's a beautiful pattern right at the 78% level. Butterfly bottom, all the stuff is looking pretty good. Yes, gold and silver are moving higher. I just heard the beeper go off for silver making the 78% level, and gold has taken out the high that we made a week ago after we made that 382 retracement in the gold. We'll bring this up to let you folks look at it, because one of the things that we were talking about, we went right down to the 382 there on Friday at 1237. It was a 382 retracement, and 5 days down, a very, very important low. And now we're trading where we've taken out that high from early December. So any tiny bit higher than this, we're looking at 1275 most probably, and maybe even 1290. You know, anything could happen with this thing. So, and with the Fed in here today, anything could happen, and it usually does. So anyway, that's what we're looking at here. It's important that the gold pops through here and closes really strong, because if it doesn't, that means we're just taking out stops, and that tells, well, we've already gone $2 above it, so that's an important sign here that we're getting ready to get above that level here. We're trading at 1259 right now, and the ABC swing on this takes us to 1268, so we're $9 away from the ABCD structure on that pattern that we had posted. So it's moving in the right direction. Crude oil just made another new high on the day, a little above 47. So that looks like it's moving in the right direction. And as I mentioned earlier, if you did do the buy on that, put your buy stop at break even. You don't want to give up anything at that level, because that money that you made goes into your pocket, not anybody else's. So take a look at that. Now, we've had a question about the natural gas. I'll bring this up here to let you folks see it, folks, because I follow it very closely. It is an absolute, really fabulous trading vehicle. I mean, we've done it over and over again to show you how these things move. And I just wanted to this thing today, just today, we have moved $4,000. That's equivalent to 80 handles in the S&P. And you know how many times we see 80 handle move in the S&P? You can count on one finger of a man with no fingers. So it doesn't happen very often. But look at natural gas here this morning, because it's very okay, Russ, no problem. Look at natural gas. We made a 1.618 expansion of the move from December the 17th, which was a huge move. You know, it dropped $3,000, and then it rallied $5,000, and then it broke down today. And look at the rally back. The rally back at 3.79 was a 382 retracement. Now, this is just a 15-minute chart, but this is how you control your risk. And what did it do? It dropped another $2,000. And so what we're looking at now is a potential ABCD pattern in this. And the problem is that we've had a little bit of an expansion to the downside, but we're probably closer to a bottom here in natural gas right now than we are, further collapse. Now, whether that's going to be true or not, it's just a 15-minute chart, but this is the pork bellies of the energy complex, folks. This puppy moves around. It really trades well. Your stops are elected pretty much where you want to be. I mean, sure, there's going to be times where there's probably a vacuum in there, but you don't want to be trading during a major report anyway. But this is a really good high volatility here, folks. And natural gas is far more volatile than the Dow Jones or the S&P, even the NASDAQ, which is kind of wild. But watch this one. It's got a lot of, let's just bring this up so you can see the ABCD that we're looking at right here. And we will take a little look at it here to see what we're watching. Okay, now someone asked a question: is what am I looking for as far as the notes and bonds? You know, I mentioned earlier, I'm the only person in the world that's bearish the bonds and notes, but that's what it looks like to me. And whether it'll happen or not, it'll probably be something totally different. Maybe they're not going to do anything this time. You know, anything could happen. And believe me, the Fed plays the market all the time. They got over 200 traders that they employ that are, trading these markets against you. And if you think that they don't have an advantage, look in the mirror, because they really do. Shane Smolian has pointed this out to us. for well over a year how the Fed is using that Fed juice to goose the market. I mean, that was just unquestionable how well he picked up on that. So they'll probably be in there even bigger time today looking at these things. So we'll pay close attention to them as we see this thing unfold here for today. All righty here. Oh, we got a break time coming up. Shut the front door and raise the rent. We're going to have tomorrow, Norman, we call it to the minute, Winsky is going to be our guest tomorrow. And hopefully we're going to have Stan the Man Harley from Harley Stock Market Letters on Friday. I've got to make a little correction on that, but it should be okay. And we'll be right back. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back, and we'll get the little review here. We think that there's a bottom in here. We posted about half a dozen charts showing a possible bottom, so we'll take a look. Now, today's action in the S&P looks pretty interesting because we made that low last night at 25.30. We rallied up 30 handles. We pulled back 20 handles to the 382 retracement at 25.49. We're now taking out the high at 25.64. That tells us we're probably going to go 30 handles higher. That'll take us up to the 25.90. Anything above 26.30 in that S&P would certainly tell us that we're probably made a relatively important bottom in here. Crude oil, we're trading at 47.12. The 78% level was at 45.80, and we're up about $1.50 from that level. Of course, we've got oil numbers today at 10:30, so that'll be exciting. And even then, we have our friends over there on Washington Street on Pennsylvania Avenue, the Federal Reserve Board, and they'll be out with their usual bells and whistles. I believe it's at 2 o'clock Eastern time when they bring all this out. So expect the unexpected. That's about what they're doing. They're going to be fading it no matter what, either side. So those are the main things that we're going to be watching here. So that's it. One other thing, folks, it's Christmas season. A lot of people don't have very much. They're hurting, especially the veterans. If you get a chance to help somebody, you know, it's a great thing to do. It makes you feel a lot better. If you remember that nice letter we got from Steve Jobs telling us that money don't mean diddly, because it's not the price, it's not the number of toys that the man has at the end of the game. It's how he lives his life and the family and friends that he leaves behind. So try to help some folks. That's probably the bottom line of what we're looking at. We got gold at 1261 now. Nice breakout here to the upside. Silver breaking out also, so we're looking at least 1268, 1267, 1268 in the gold. Probably today, it doesn't take much. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.